a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about money market funds. So we know that stocks have been on this roller coaster ride lately because investors are struggling to decipher the impact of President Trump's tariffs. And amid sell off caused by the uncertainty, many investors are looking for safe areas to hide in till there's better clarity on the trade policy. And one such area is money market funds. So last week, money market funds industry's assets exceeded $7 trillion. Investors have been pouring money into these money market funds. And these are basically cash management tools. And in fact, they have been quite popular over the past few years, not only recently due to tariff uncertainty. Last few years, because the Fed has raised interest rates. So short-term interest rates were close to 5%. They have come down a little bit recently. For example, Warren Buffett has been sitting, his Berkshire Hathaway has been sitting on a cash pile exceeding $300 billion, and he invests in short term treasury bills, which exceed close to 4.5% now. And since retail investors, for them, investing in treasury bills is a little difficult, so money market funds, they are excellent cash management tools. And earlier, only mutual funds were available to investors. Recently, ETFs, we have seen launch of 3 excellent money market ETFs also. So ETFs are democratizing investing for investors. And so this is an area which was not accessible to investors via ETFs earlier. And now ETFs have made that possible. So if you love the ETF structures, these money market ETFs for you, they have excellent liquidity, they are low cost, and they are transparent. So money market mutual funds, most of them are required to maintain a net asset value of $1 per share. Their shares do not appreciate, but investors receive those regular dividends, and that's how their investments grow over time. ETFs are not required to maintain that $1 per share value. And in fact, all 3 that we are going to discuss, they have price handle of $100, but their value will remain very close to that $100 per share. And talking a little bit about that $1 per share NAV. So, in the event that NAV falls below $1, it is called breaking the buck, and that doesn't happen. That is very, very rare. But it has happened during the 2008 financial crisis when 3 money market funds, their value dropped below $1. And after that, regulators implemented some more measures to avoid that reoccurrence. So, what these money market funds are? So, these basically funds that provide investors with relatively safe option for managing their cash. They invest in high quality short-term debt such as treasury bills, federal agency notes, municipal bonds, etc. These are the 3 main types of money market funds. So government money market funds, they invest in treasury bills and agency bonds, including those issued by Fannie Mae and Freddie Mac. Prime money market funds, they invest in corporate as well as government securities and since they hold corporate securities as well, obviously their yield is going to be slightly higher. Then there are municipal money market funds, which are very appealing to high income investors because income earned is generally exempt from federal income tax and often from state income tax as well. So Municipal money market funds are not currently available in the ETF format, but the first two. So let's take a look at them. So Texas Capital Government Money Market ETF, ticker symbol MMKD. This was the first ETF to follow the rule which governs the money market funds, 2A7 rule, which governs which instruments they can invest in, etc. Has charges 20 basis points and has 50 million in assets, currently a 7-day yield of 4.30%. So if you want to learn more about this ETF, you can go to the code page on Zacks.com, read our articles, research report, and using the link, you can go to Texas Capital, which web page for this ETF. As I mentioned, 4.30 is the yield currently, and you will see that the price will remain very, very close to $100. If you look at the holdings, you will see that it is currently mainly invested in treasury bills and cash US dollars. Then after this ETF, iShares launched two money market funds. The first one is Government Money Market ETF. The ticker symbol is GMMF. This also follows that 2A7 rule, and this currently has a 7-day yield of 4.09%. Same expense ratio, and this has 33 million in assets currently. And again, you can use the link on Zacks.com to go to iShares webpage for this ETF and look at the details. Currently, what it holds. So it is currently holding 64% is in US government agency repos and 20%, about 20% in government agency debt, etc. The third one that I am highlighting is the Prime Money Market ETF by iShares, PMF. So as I mentioned earlier, Prime Money Market funds can invest in corporate securities as well. So obviously the yield is slightly higher. Same expense ratio, and this has gathered 120 million in assets. So it's been quite popular with investors, though it made its debut very recently. And again, for this also, you will see that price will remain very, very close to $100 price as well as NAV. And let's take a look at the holdings quickly. So this has 46% in US government repos, and then it holds CDs, corporate debt as well. So CDs and commercial paper, asset-backed commercial paper, etc., which results in slightly higher yield. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer. Make sure to subscribe to our YouTube video channel so that you do not miss anything. And I will see you next week.